Hello and welcome to the Money Street. Whether you invest in the stock market or not, this video will be useful because the new economic scenario that is coming will affect us all equally. The famous economist and investor Ray Dalio just gave an exact date where the world will change in a very significant way. These new changes that are coming are going to have serious implications on the value of currency investments such as the dollar, the euro, real estate investments, or even inflation and the cost of living. In fact, Ray Dalio has already warned that this new economic scenario is going to be the biggest change in society and in the economy in the last 100 years. In this video I am going to show you the key date that Ray Dalio has mentioned where he believes that the world is going to start changing in a very significant way and what reasons lead him to think that. In addition, I will show you the advice that Ray Dalio has given to protect your investments and your savings in this new economic scenario that is coming. Ray is one of the most influential people in the world economic scene. He is the largest manager of investment funds through his company Bridgewater, where he manages more than $100 billion, and he has been to prestigious meetings such as the Davos Forum. To put into context the power and influence that Ray Dalio exercises over the financial markets, the amount of assets he manages of this $100 billion is currently greater than the gross domestic product of some countries globally. During the years he has proven to be highly reliable in predicting major economic changes and in this way has protected his investment portfolios from major crises such as the one we experienced in 2008 or the previous technology bubble in 2000. Now that Ray Dalio has become a multimillionaire, he has decided to make public his research about the economy and the future that awaits us, publishing in his new book, The New World Order. Since some time ago he is trying to warn society in general that we must adapt to this new economic reality that is coming, or else we will suffer serious consequences. Recently, in one of the few interviews he has given, he revealed the exact date where he believes these economic changes will begin, along with the reasons and events that will trigger it. I am going to explain them to you. In this interview he mentioned the following. There are three problems that are coming together, and it is important to understand them individually to know why they pose an even bigger problem in conjunction. First of all, there is a monetary and debt cycle problem. What is starting to happen is a recession coupled with a very large social inequality which is contributing to a polarization of society and politics. First of all, we see as Ray Dalio mentions the problem of inequality between classes, which is leading to the rise of populist parties. This, in his opinion, is going to have a negative effect on economic prosperity and social welfare. In the following graph, you can see how 90% of the American population owns less and less wealth. In fact, a select group of only 10% of the American population owns 75% of the wealth of the United States. Also, the crisis that we have lived during the year 2020 has increased this problem because governments have had to issue significant amounts of debt to save the economy. This debt will have to be paid by the taxes of the working class, who have not benefited from the significant economic boom that we have experienced in recent months, where there have been significant increases in the value of real estate, stock market investments, or even other assets such as cryptocurrencies. If you are enjoying this video, you can like and subscribe to the channel by activating notifications. The second problem mentioned by Ray Dalio is that the USA is losing its competitive advantage in favor of China, which is going to have serious consequences in the West and in the level of wealth. In particular, he explains the following during this interview. The USA is a 75-year-old empire that is showing clear signs of decline. The USA is in a terminal phase of credit cycle. We are producing a lot of debt and we are printing a lot of money. What Ray Dalio wants to explain is that in the past United States could issue all the debt that they wanted, and if they could not repay it, they proceeded to issue new dollars. This in any other economy would cause the value of their currency to plummet. Otherwise, when you have the economy and the dominant power worldwide, the effect is inverse and the value of the currency is preserved. However, the question Ray Dalio asks himself is, what will happen in a few years when China will surpass the US gross domestic product and its global relevance in military terms and technological innovation and influence will be much greater than that of the US and the dollar? And this is precisely where the problems arise. In each of the crises that we have experienced, the solution has been to print new dollars to solve these problems. But what can happen in the West if, in the next crisis, people lose confidence in the dollar and this new recipe is no longer valid? In fact, in the following graph you can see the large printing of dollars that has been carried out during this crisis of 2020. They have been printed more than 20% of the total number of dollars in circulation. This new printing of money has been massive if we put it in the context that the dollar is a currency with 200 years of history, and in just 1 year 20% of these new dollars have been issued. In fact, it is expected that China will surpass the United States in terms of gross domestic product around the year 2030. The question Ray Dalio asks us is, what is going to happen to the dollar and its value as a currency in that scenario? Ray Dalio makes the following prediction for the future. In 5 years we could see a situation where foreigners who have been lending money to the United States will stop doing so, and the dollar will cease to be accepted as easy as before around the world to make purchases. We have been spending more money than we were earning. When the hard times come, society will fight among itself. The poor will want more money from the rich, and the rich people will try to protect their money. In this way, Ray Dalio is trying to warn us that the world will change significantly in the next 5 years and that we need to act immediately to protect our savings and our investments with the following advice that he gave us and that I am going to show you. In fact, Ray Dalio has just released one of the most revealing graphs explaining why the US may be entering a terrible economic recession and the significant impact that this will have in the veil of the investments, the dollar, the currencies or the real estate investments. What Ray Dalio discovered after his deep study of economies and their history is that fundamentally, there are 2 phases in every economy, up and down, and that each of these phases are perfectly defined by certain events that give us clues of what is happening at each moment. In this graph by Ray Dalio you can see how the US is entering the decline phase, which is characterized by a high level of debt and money printing in alarming quantities, while on the other hand China is in the upswing phase, which is characterized by wealth creation and the accumulation of debt in the first phases. In this exclusive interview conducted by Ray Dalio, the journalist asked him, what is the smartest and wisest decision that small investors could make to protect their savings and investments and even take advantage of the opportunities that may appear in the future? Ray Dalio answered the following. First, you have to worry about the value of money at the same time that you have to worry about the value of your investments. That's why since they started printing money, the value of assets has gone up like stocks or gold. Because of the creation of new debt and new money, you don't want to have things that you think are secure, as liquidity. The first advice that Ray Dalio gives us is easy to apply, and it is that we have to avoid having liquidity because at a time like the present, where there has been a lot of money printing, inflation appears and that undermines our purchasing power in a certain and safe way. This way all people are forced to become investors, either in stocks, real estate or other assets later on. In this video I will show you some of the stocks that Ray Dalio has invested in to protect himself from this new economic scenario. Going back to the second advice that Ray Dalio offered to investors to protect themselves from these new changes that the New World Order is going to bring, he explained the following. You have to know how to diversify well. This includes knowing how to diversify between countries, currencies and assets. When something goes down in your portfolio, another asset has to go up. To see your portfolio in a relative way, diversify and worry about the value of liquidity. One of the theories that Ray Dalio developed and that has made him the richest person in the world was the theory of the 4 seasons portfolio for the management of your own investments. In this way, because of what he explains, is that you have to have a portfolio prepared for the good economic times, but also for the bad economic times. If we look at how Ray Dalio has managed his portfolio over the years to obtain these excellent results, we see how he recommends having a series of assets in portfolio. In the first place, he recommends having 40% of your investments in stocks. The question we could ask ourselves is, which classes of shares are more interesting in economic scenarios similar to the current one, given that many of them are quoted in the market? In the following chart obtained from JP Morgan, you can see the investments that do better in each of the 4 main economic environments that exist. That is why Ray Dalio calls it the portfolio of the 4 seasons. I want us to focus on the chart on the top right, which is the one we are currently living in, since we are starting from an inflation that is high, but that is expected to go down in the next months. This has happened 6 times throughout the history. We see how in this scenario, the best performers are the stocks of emerging countries, followed by small-cap stocks or stocks of low capitalization. Curiously, and contrary to popular belief, in the current scenario we are experiencing, the investments that have one of the worst performances are gold, liquidity and commodities. In fact, if we look at Ray Dalio's portfolio, we see some very interesting things that are in line with what he is telling us. This study by JP Morgan. We can see that 3 of his top 5 investments are ETFs related to stocks in emerging countries that trade under the tickets that I point out to you in this image. This way that Ray Dalio applies to invest in emerging countries can be very smart when we do not have a deep knowledge of the economy or the particular stocks of that country. In this way, by buying these ETFs, Ray Dalio benefits from buying together a basket of stocks that represent all those emerging countries. The next group that also tends to do quite well in this scenario are the small-cap stocks. The problem for a big investor like Ray Dalio, who manages $100 billion, is that some of these companies barely capitalize $1 billion, so he can't invest in them because of a lack of liquidity. Due to this reason, the only possible alternative is to invest in ETFs related to small-cap stocks, as the Russell 2000 Index ETF, also known as IWM, that groups together the top 2,000 small-cap companies in the US and which is currently trading near $176 per share. Let's remember that according to this study by JP Morgan, when economic conditions have been similar to the current ones, these low-utilization stocks have given returns of over 17% per year. Even in other economic scenarios, low-utilization stocks have also historically had a fairly positive result. This is due to several factors. Firstly, a low capitalization stock has less market following, so the chances of it being cheap are higher. Secondly, smaller companies have more growth potential. A company like Ford or General Motors that are already present worldwide cannot grow. However, the performance of a stock on the stock exchange is closely related to the performance potential that can experience in a future, which small-cap stocks usually have. Thirdly, large investors or those with more experience, as they already manage a lot of money, cannot access this lucrative market because of liquidity and because it is not exchanged at a sufficient volume of shares for them to be able to build a big position. The third asset class that Ray Dalio recommends to always have in the portfolio is a small percentage, never more than 10% of gold. This can be easily achieved through ETFs related to gold mining companies or ETFs that represent the purchase of physical gold. And finally, the next investment that Ray Dalio recommends to always have in the portfolio are bonds, including those that are inflation protected, which at the moment are very interesting. Ray Dalio explains that this should never exceed 40% of these investments, and they have that defensive part that when other investments go down, like for example stocks, these bonds would have to behave well. However, at the present time there is a certain bubble in this bond market because of all the money printing that governments have done, and, in fact, Ray Dalio himself is applying a much more conservative asset allocation to this segment of the portfolio than in the past. I hope you liked this video and that you have learned how some of the most successful investors of all time invest. If so, let me know in the comments so I can continue creating similar content in future videos. Thanks for watching The Money Street, and don't forget to click the subscribe button for more financial videos.